Let's talk about investing today with Potomac Wealth Advisors founder and president, Mark Avallone. Mark, kicking things off with you. Your thoughts on the earnings period. Is that going to be a boost for markets? What are you expecting to hear?
Well, thus far, earnings have been a boost to the market. Of those reporting, over 80% have beat expectations. But a lot of those were financials, and financials are not really impacted by supply chain disruptions or even COVID. And they have been benefiting from movements in the yield curve and rates rising. So it was kind of a good way. It was a great first inning, if you will. And I'm not sure that it's going to be across the board in unison looking at each company. Each company today, it's very interesting that the ones you mentioned, they all have a specific story, whether it's J&J on the healthcare or Netflix. The disparity between what's going to be reported is going to depend a lot on what industry they're in. If they're impacted by supply chain disruptions, then I think you're going to see more cautious tone, more cautious outlook. Something like a Netflix, you might see something much more positive in terms of winter coming, flu season, people and great new content, and people willing to stay home, get back on the couch and watch. So the dynamics for each company are going to be what drives earning reports today.
Yeah, it's a great point. The banks give us a good window, though, into the macro story. And we spoke with Brian Moynihan yesterday, Chairman and CEO of Bank of America, who said loan demand was up, capital markets was up. Pretty much all of his lines of business very strong at B of A. Does that tell you anything about the macro story, even though we are looking at things like inflation and the supply chain disruptions?
Well, we've talked about financials before, and I've consistently been positive on them. I think that the improving credit quality in a rising yield environment sets the table for community, regional, and mega banks. And then when you look at what Brian Moynihan's managing and banks like JP Morgan, you add capital markets activity, huge asset management activity, and they're in all the right sectors. I think there is strength in the underlying economy. The consumer is strong. Look, we went into this pandemic with a very strong economy, and the stronger a patient is before they get sick, the stronger they are when they recover. So once we got the vaccines, we just picked up right where we were with a roaring economy. So I do think to some extent financials tell us where we are. The problem is what's on the horizon. We have a lot of talk out of Washington that is not pro-business. We have the potential for tax hikes. We have more regulation. We have M&A scrutiny coming into play. And under the surface, these huge regulatory agencies are adding layers of costs, and it's not a pro-business environment. And I think that investors are shrugging off the twin impact of taxes on the bottom line of corporate earnings and higher taxes from the desire for investors to be investing and taking on risk. So I think when we look forward,
I mean, we'll see about that. The president's going to be meeting with Democrat lawmakers at the White House today. He's trying to save this spending agenda. Democrat leaders are vowing to get some kind of a framework on the agenda for that reconciliation bill. They were looking at October 31st. Now they're moving the goalposts out toward year end. And you think this D.C. drama is a growing risk, right? Because if we were to see the capital gains tax go up to, what are they talking about, 39.6, 43% for capital gains, does that trigger a sell-off in stocks year end?
Well, if you own, tell you what, if you own some stocks that are at big gains this year, it might make sense. The problem is they may retroactively make the capital gains tax. Look, higher taxes are a headwind. That's a flat out case. I know we could say it's only a few cents to earnings, but they're taxing both individuals and corporations. I think the infrastructure bill, if it's the right size, a very modest amount targeted, could actually help. If you've noticed, industrials and materials have flatlined since March, April, when these talks realized they weren't an automatic. So I think what happens out of Washington, if it's a modest package, could be positive. It's just the other factors that are concerning to me.
Right. Yeah, unfortunately, the Democrats want to tie these bills together. They don't want to get infrastructure done without reconciliation. So it's unlikely we're just going to see infrastructure get done, Mark. But we'll be watching and, of course, talking with you along the way. Thanks very much for your insights this morning. Mark Avallone joining us on markets, which are looking good this morning. Mark, thank you.